Hi everyone, it's Alicia. Here's some top things you want to consider when picking a loan officer to determine they're the best loan officer for you. So when it comes to financing your home, a good loan officer is going to be able to answer you all your questions and provide you with all the options that you need. So you have many options to look for in real estate loans, such as you can go online, like Quicken Mortgage, or you want to go to a local branch and find a local one-on-one customer base loan officer. So shop around the loans. There are tons of loans out there, such as FHA, VA, USDA, conventional, jumbo loans, down payment assistance, home as possible loans, and more, okay? So it may seem like it's complicated, but there are so many other products and programs that when you get a loan officer, they can provide you with all the options that you want, and you can explore the options together. So first, what I would do is Google everything, okay, that you want to know about loans. First, find a few local branches near you and getting some idea where they are, where they're located, and the loan officers are, and how they operate their business, and what chamber they're at, and some basic knowledge of the loans that are provided in each branch. So you want a knowledgeable loan officer, and their experience with closing the loan that you want in that branch. You want to find out what makes a lender reputable, and a customer service is always going to be one of the biggest concerns. You want quality lenders who are approachable and always available to answer and provide you with their personal number, and they're always available to you to answer all your concerns regarding to obtaining the right loan. And an active lender is usually solid and reputable, and because they're able to provide you all the information you need, because you want to make the best well-informed decision before you sign yourself up for a 15 to 30-year fixed rate mortgage. Make sure you know exactly what the trade-off are, because there usually is a trade-off to get the best rate for the mortgage, and you're able to get the rate down with other fees involved or pay down on the points. So here's what you want to do, okay? So complete an online loan application first and submit your documents to the loan officer and that you want to have a meeting with, and ask them based upon their experience and what are the loan options that are available to you, what would be the best choice. So here's some top questions for you to consider as a home buyer, okay? So this is what you should ask your lender, okay? So based on the goal that you try to achieve, what are the type of a loan program do the lenders recommend? So based on your goal as a buyer, such as, do you need buyer's assistance? Do you need closing costs? Are you interested in getting best way possible based on the options you have? Or are you going to get more of the loan than you can afford? Or you might need some creative financing techniques to assist you based on your goals. Here's again, this is what you should ask your lender, okay? So based on your goals, what are the best program for you are recommended by the lenders? Question number 2, the interest rate, okay? So when you actually look at interest rates, the actual fact is that the interest rate changes every day and even several times a day. So a loan officer can quote you at a rate that of the day, but it will change by the time that you close your new home. So it all depends on how you're going about the shopping for your home with your realtor and entering into an escrow and closing on your home. So from the time they rate you and quoted you, so it's within the time frame of 1 to 3 months. If there is a lot going on in the market, you're going to be comparable terms, and what you need to know what the rate is, because it's going to impact on how much money of the loan you can use to close on your new home. So knowing all the terms that comes with the loan is just like real estate contracts. because the devils are in the details. So for instance, if you put a down payment and you need a down payment assistance, when you close on that rate, it will actually increase the rate. So in order to buy down the rate, it's gonna cost you some money, okay? So to get a low interest rate. So company offer rate locks that can be provided to you, like a home buyer for yourself, for a fee from 3 months to 6 months before you purchasing a property. However, on the other hand, if you know for sure that you are motivated to buy a house, okay, but you are not going to be buying a house for at least 3 months, you want to lock in today's rate because you're afraid that interest rates are actually going to be going up. As a loan advisor, based on the rates are doing in the market today, what do they think the rates are actually going to be doing in the future? Or do they believe that it's a smart idea for you to lock down today's rate? Ask these questions to determine whether you need to pay for today's rate lock to lock it down to secure the interest rate in the future. Or it will be a situation for you that it's okay for a loan officer just to write out the loan, and in the end of the day, it's up to you for you to pick with all the information that's provided to you and help you with the long way. So what are points? How much are points cost? So many people got caught up into the points when you get tons stat across the different sites with a tiny little fine prints, okay? And the best way is to read the little fine print regarding what the points are actually going to cost you, because by agreeing to pay for that 1 to 2 points with a quoted rate, that might be something to 3-to-1 adjustable rate mortgage. You want to know what exactly what says on the fine print and how they coming up with that rate, because essentially with the points is some lenders that do charge for points if you want to buy down the rate. And here's some idea with that points is, and every point is going to cost you 1% of the home price. Here's the math in a fast breakdown. So a buy down is, let's say if you're looking for a $1 million home, okay, that's 1% of 1 million, and that's $10,000 on 1 point, and that's how points work. If you want to buy down 2 points, that would be $20,000. That's what points work. And it depends on how long you want to stay on the home. Or are you going to repurchasing? Are you planning to stay there 20 to 30 years? It would make sense to buy down the point. But average people would be moving 5 to 10 years. So usually it doesn't make sense if you want to buy down a point if you want to move within 5 to 10 years. So having a clarity and having questions to ask yourself, what are your intention with this house? Like how long are you going to be living in there? If you do believe in there, if you want to live in there forever, of course, it's perfect for you to consider buying points. But if you know you will be moving to place for job promotions, if you have more than one place you want to live in the long term, you see yourself moving to a different house, then a point is not an option for you because it doesn't make sense to buy a point, okay? So you want to factor out your consideration, neither you want to buy a point or not. So lending all-in costs. So knowing that there is buyer closing costs besides a down payment. So buyer's closing costs, as a loan officer to break it down for you, for your reference, considering buyer closing costs, planning on 2% to 4% of the home's price. So for instance, $1 million home, you have $20,000 to $40,000, okay, to be prepared for your buyer closing costs, and that's 2% of 1 million and 4% of 1 million in the down payment. So there's down payment and there's buyer closing costs. And yes, plus loan origination fees. Loan officers charges a loan origination fee. Is a one-time fee charged by a lender to process the application and get going whenever you start going into the closing process in escrow. So what is an origination fee? So the fee including putting up your credit report, a home appraisal report, which you as a buyer pays for the home appraisal, and you also have to pay for recording fee with the county. And most important is ask a loan estimate, so you're clear on everything and plan everything accordingly, so you'll be sure you have more than enough money to pay for all these fees, so you're prepared ahead of time. So it's super important to plan ahead of time with your realtor and understanding the home buying process before heading out to the market and start looking for a house, so you can have absolute clarity on coming up with a game plan upon your goals with real estate to be successful with whatever you're planning to do. Ask a lender if there's a prepayment penalties on the loan. So this one, you want to make sure if you decide to pay off your loan early ahead of time, you're not going to be charging a prepayment penalties on the loan, because some programs do charge for a fee for prepaying early ahead of time. Where does the underwriter take place on my loan? Because your loan must go through an underwriter for final approval. So having an in-house underwriter in a firm is faster than having one that's out of state or in another area or location, depending on the company. And they might have one that's out of state and with different time zones. So the advantage of having an underwriter in the firm will make the process a lot more faster and smoother for you in order to get the underwriter approval done. So the time frame on closing on a loan. How long does it take for you to close on a loan, and what is your successful closing ratio on the loan, and what's the normal time frame? So you want to know these because you have different market going on. You have seller's market, buyer's market, slow market, and stable market. And if you are in a seller's market, you're going to be buying a home with multiple buyers bidding on a home. So in order to provide a compelling offer for the seller, you want a normal escrow period like 30 days because you want to negotiate the best terms with the seller. And a seller's driven motivation is to sell this property quickly and move on to their next plan and move on to their next home. So offering a quicker closing time frame on the escrow as you as a buyer definitely provide an advantage and beneficial to you as a buyer. An escrow period usually takes about 30 days to 40 days, but usually it's about 30 days. So quicker closing time frame is more appealing to the seller, but also it takes time to close on a loan. So it all depends on what state you're in. So definitely ask your local selected loan officers to know ahead of time how long this process is going to take from start to finish on closing on a real estate. The loan closing rate. So what is the closing percentage, or what is the closing rate of the loan officer? Meaning out of all the loans that the loan officer has closed on a yearly basis, what is the percentage that they have helped those families or their clients close on the loan? And that's a great question for you to have a reference that you're in good hands when you're in escrow, because you have a high chance of getting the loan approved. So if it's above 85%, 90%, 99%, or 100%. And that's important because this is for your own reference that how skillful the loan officer actually is. And however, there are things that also need to be taken into consideration is, let's say you as a buyer bought a brand new porch in the middle of a closing process. And that will factor in your chance of getting the loan approved. So don't do that. But in many cases, if you as a buyer follow everything you need to do and the loan officer is in control, the loan officers will follow all the guidelines, and you want a good loan officer with a great loan closing percentage. So the higher the loan closing ratio is better, and the shorter the escrow period is better. Number 10, after closing, will the brokerage sell the note? So after the loan officer closes on your home loan, will the brokerage sell the note out somewhere? So most of the time, brokerage does sell the note, such as VA, FHA, conventional, USDA conventional, jumbo loans. and you want to know where your mortgage is at all times, and you want to make sure it's not being sold. Well, it's just something to consider about. Okay, now that we have gone over 10 things you need to consider as a buyer on picking the right loan officer, let me know your feedback. If you have any questions, please comment below. Please comment, share, subscribe, and if you have any questions, please connect me through Instagram, and elated to help.